Well, the entire cement universe will be in focus. You've seen two results coming out, two important companies, two major companies, one from the Lafarge-Holcim Group and also Ultratech Cement, India's largest cement maker. Now, when we are talking about the cement companies' earnings so far, Ultratech Cement has clearly seen the impact of higher fuel and power costs, and this has impacted their margins. In fact, there are worries that margin pressures may actually go ahead and increase due to the fact that you are seeing significant increase in diesel prices, coal prices, petcoke prices, and companies at this point of time are looking to mitigate the impact of these worries or these woes by taking price hikes. Price hikes so far have been calibrated. It remains to be seen whether the companies are able to take price hikes, maintain volume offtake, and whether the market is able to absorb these price hikes or whether there is pushback in terms of demand. Now, when we're talking about ACC, the numbers are slightly above what the ET now as well as the consensus estimates were, which is a positive surprise given the fact that Ultratech Cement managed an inline to marginally weak set of results. Now when you're talking about the revenues came in higher by almost 6%, coming in close to the 3,750 crore mark. The core EBITDA came in close to 712 crore, up almost 6% on a year-on-year basis. The slightly better news was the company managed to maintain its margins at close to 19%. Now, when it comes to ACC and Ambuja, clearly, the master supply agreement that both of these companies entered into is something that is helping the companies save significant amount of cost. So these cost initiatives have actually helped the companies maintain their margins. What is the MSA agreement? Simply put, ACC and Ambuja use each other's clinker facilities, each other's facilities in terms of logistics management, and helps the company actually reduce costs. Now, when you're talking about the profitability, up almost 24%, coming in close to the 450 crore mark. Cement sales volume came in at 6.6 million tons, up almost 1% on a year-on-year basis. The company says that the industrial and commercial construction demand continues to witness revival. Better price realization were led by commercial margin levers. And when you're talking about the inflationary impact of coal and petcoke prices, this was partially mitigated through Project Parvat. You're talking about power and fuel costs impacted by global fuel cost headwinds. JP Morgan has written a note post the results of ACC, has maintained the overweight stance on the stock, target price at 2,450 rupees a share. They say that Q3 was a beat driven by narrower than expected ASP decline, average selling price decline. Cost inflation is coming through. They are expecting more cost inflation going forward. They are also expecting the full impact of the sharply higher spot prices. So imagine most of the cement companies to be cautious when it comes to margin figures and to be quite optimistic in terms of demand and getting across price hikes to the end user.